Let me start here. We're not going to bore you with details. We're going to go right to the core. For those who don't know me or who haven't attended any Financial Policy Council event in the past, my name is Ziad Abdelnour. I'm President and CEO of Black Hawk Partners. I'm managing partner, which is a private equity firm. I am a managing partner with OMV Capital, which is a leverage finance trade platform. And I'm a chairman and founder of the Financial Policy Council. Let me tell you about the Financial Policy Council first. We started this organization back in July 2010. So we're going into our 11th year soon. And the purpose and mission of the council is to empower people, is to create wealth, and is to find solutions for a lot of problems out there. We're not a political organization. We don't talk politics. We have Democrats and Republicans on board. We are very independent. We're not bankrolled by any PAC or any organization. Fiercely independent. What we have in common, those attending this webinar and our constituents, is we're all freedom-loving capitalists. Now, you can have a Democrat president or Republican president, it doesn't matter. What matters is, how do we outsmart the system, create wealth, whatever the circumstances are? We're not here to bitch and moan about who's in power and to go exchange email and text, blasting this one or that one. We are capitalist entrepreneurs. There's a lot of capitalist Democrat and Republicans. So we're going beyond the narrative that if you are a Democrat, you're not a capitalist. Not true. A lot of the wealthy people out there are Democrats too. So we don't talk about politics here. That's not the reason. That's not the reason of our existence, but rather to create wealth, empower people. I've also created a master course called the Z-Shark course, which is growing by leaps and bounds, to teach people, educate them how to really create wealth. It's all in the financial education. We're a 501c3 nonprofit organization, by the way, the Financial Policy Council. And all the proceeds that are going to the Z-Shark course is going to the Financial Policy Council. I'm not taking a dime from that. The purpose is to build the constituents, the subscribers to the Z-Shark course, and the constituents to the Financial Policy Council. You will not find in New York City or anywhere a totally independent nonprofit organization that's focusing solely on financial education and economic empowerment. There is none. We are the only game in town on that. So if you believe in these values, in this mission, please feel free to join. I can tell you how to do it. As a board member, as a subscriber, as a supporter, whatever. You see, in life, there are some things you control and some things you cannot control. We cannot control who is in power, even if you have all the power you think you have, but we can control our destiny and how to make, excuse my French, fuck you money, no matter who's president, no matter who is in power. This is how the smartest people operate. Elon Musk made his fortune because he went and did something in line with Joe Biden's policy. He made more money than any capitalistic regime under a very socialist regime. So you really gonna have to think about, this is all about yourself, your well-being, not about what's happening around you on things that you cannot control. Take control of your destiny, be disciplined about it, and this is what the Financial Policy Council is all about. So we're gonna talk today about, we've been doing events and webinars for years, over 10 years now. Some of you may have attended our events, others have not. So as you can see right now, we're going to talk about different asset classes and how do you make real money in these asset classes, no matter what the circumstances are. The market is up, the market is down, doesn't matter. The Bitcoin market is up or down. The private equity market is up or down, doesn't matter. Take control of your lives. Be very educated about it and network with the right people. I've done it very successfully. Anyone can do it. So the way we're going to start, all of the panelists today are board members of the Financial Policy Council. And each one of them is going to introduce himself for like a minute after my talk. Then I'm going to be addressing questions to those board members, basically my partners, basically people I've known for years who are very accomplished in their own way. Some questions to set the tone of the webinar. After that, or while doing that, if you have some questions for them and myself, you can put it in the chat box on the right, and Christina will basically gather these questions, and then she's going to be the moderator, relaying your questions to the panelists, to my board members, and myself included. So we're going to try to give you short, direct answers. Please be very direct in your questions. We don't want comments. We don't want people to go and spend 5 minutes asking a question with giving us their opinion. Just, there's no stupid question. There's no tough questions. Anything is open. We're here to provide solutions. We're not politicians trying to avoid a question. We go and face things heads on. And this is why we have been thriving over the last 10 years, because it's a breath of fresh air for a lot of people out there. Anyway, enough talk. So I would like to hear right now from like a minute from every board member about who they are. Then I can start drilling them with my questions. So go ahead, start with whoever. Paul, you want to start?
Yeah, so my name is Paul Vancea. I am a financial professional. Out of school, my first job was as a corporate financial analyst for a telecommunications company, $7 billion in Massachusetts. After a while, I started working with some startups and investors in the Boston tech scene. And just recently, in about 3 years ago, I decided to focus on the cannabis industry, enter the industry through the public company. I was leading the accounting and finance department for a publicly traded cannabis company here in Denver. And over the past couple of years, I branched out on my own to do cannabis financing. And now I'm the president of a company called Cam Investments.
Thank you, Paul. Stanford.
I'm Stan Silverman. I am the treasurer of the Financial Policy Council.
Stan, would you speak a bit louder, Stan, please?
Is that better?
Yes, go ahead.
Okay. So I am the owner and chairman of Silver Betty Inc., an advertising agency specializing in education, I am the founder and CEO of Minerva Capital Management, a hedge fund, also in the education vertical, and also the founder and one of two principals in Trigram Education Partners, an owner of private schools.
Thank you. Harry.
Yes, thank you, and welcome you all to the Financial Policy Council webinar. So my name is Hari Eppanapally. I'm the founding board member of the Financial Policy Council and serving as the vice president since its inception. So personally, I'm the chairman and CEO of the CIC group, which focuses on investments into health, education, and energy sector. And I'm also the co-founder of Gita Fund, a private equity fund, focuses on the industry 4.0 technologies like AI, blockchain, smart cities, and AR, VR, EV technologies. And also, I'm very much interested in project financing and working in this space since about 5 years in that space. And we welcome you all again and look forward to the questions and answers in this session. Thank you.
Thank you. Barry.
Good afternoon, and thank you for having me and everybody who attended. My core business is an IT firm, 20-year-old firm called Computronics that provides computer network support for small to medium companies, mostly in the financial, legal, and medical industry. I'm also very involved in real estate investing as well as blockchain technology.
Thank you. Henry.
Yes, I am Henry. I'm a board member of the FPC. I am the CEO and president of the Vancea Holdings. We're a private equity company focusing on technology such as cyber, security, and IT, and others. I'm a practicing chiropractor as well. And I'm a board member of Tanaka Chiropractic Missions. We take chiropractic to, poor areas in the US and Central America. Thank you for having me.
Thank you, Henry. Vladimir.
Hi there, Vlad Lunigov, founder and CEO of mBank. Together with my co-founders, I created mBank. mBank is a pioneer in digital banking technology, and through our patented multi-currency accounts, we basically allow our customers to transact in any asset class, including fiat, digital currencies, and other asset classes. I look forward to your questions, Ziad, today.
Thank you, Vlad. Bret.
Hi, my name is Bret Siarkowski, and my background is really around technology startups. So I've created and built and sold several technology companies. I started also a venture capital fund called Med Science Ventures that invest in early stage ventures. I'm an inventor and a mentor, and looking forward to today. Thank you.
Thank you, Bret. I mean, as you can see, this is a very broad-based group of entrepreneurs. They all have skin in the game. These guys don't pontificate. These guys attack the problems head on, find solutions, create wealth. This is the essence of what we do at the Financial Policy Council. Composed of people who have really skin in the game, not pontificators. We're not academics, lawyers, professors who talk about business. This is not theory. This is practical. These guys have been around 10, 20, 30 years experience, each one of them. So let me start without further delays. Ask some questions to set the tone for all of them. And then we can turn to your questions. We want to make this webinar as productive as possible. You have to get out of this saying, wow, I learned something. This is not bullshit talk like most of the academics talk when they talk about business and the economists and the lawyers. So let me start with a question for Stan, my good friend Stanford Silverman. Stan, what is the single biggest misconception people have when seeking wealth? And what are the most important qualities one has to have in order to succeed? This question, by the way, can be answered by the other board members too, but I always will choose a lead person to answer this, and the rest will follow at their convenience. Go ahead, Stanford.
Let me start off by, just providing a groundwork for what it means to be a wealthy American entrepreneur. In 1950, there was an article published in Reader's Digest by Dean Alfange called My Creed. And I just want to read it to you because I think you should all listen to what this is and say, am I this person? If you are this person, then you're on your way to wealth. If you're not this person, then you better do something to change so you can get to be this person. So here, let me just read this to you. It says, I do not choose to be a common man. It is my right to be uncommon. I seek to develop whatever talents God gave me, not security. I do not wish to be a kept citizen, humbled and dulled by the state looking after me. I want to take the calculated risk, to dream and to build, to fail and to succeed. I refuse to barter incentive for a dole. I prefer the challenges of life to guarantee existence, the thrill of fulfillment to the stale harm of utopia. I will not trade freedom for beneficence, nor my dignity for a handout. I will never cower before any earthly master, nor bend to any threat. It is my heritage to stand erect, proud and unafraid, to think and act myself, enjoy the benefits of my creation, and to face the world boldly and say, this with God's help I have done. With that in mind, so what are the biggest misconceptions about wealth? First, rich people inherited their money. This is absolutely nonsense. If you look at the facts and the figures, 82% of all of the wealthy didn't inherit anything. Nada, ninka, zoop, zilch. In fact, 76% are self-made millionaires. 31% of them came from poor households and 45% from the middle class. Only 24% of individuals who were wealthy had it given to them, handed to them on a silver spoon. In the United States, there are 11.8 million households. That's 18.6 million people, which have a net worth of over $1 million. That's 3% of the entire population of the United States. In the last 2 years, that is in 2018 and 2019, there were 675,000 new millionaires created in the United States. There are, and also in the United States, 1.4 million households with a net worth of at least $10.4 million. And there are 705 billionaires in the United States. One of the most popular ways that millionaires have made their money, as we found, is investing in real estate. So that's one thing to look at. Number one, real estate. The second thing I would say that is most difficult to understand is that rich people do have to work hard. The conception is they don't have to work hard. Oh, they have a lot of money. They don't have to work hard. Well, 44% of wealthy people worked at least 11 hours more each week than the poor people do. 86% of the wealthy had full-time jobs, worked 50 hours or more each week, while only 57% of the poor did that. 88% of the wealthy took fewer sick days than the poor. What this says is if you want to be wealthy, right, you have to work at it. You have to work hard. You have to be independent. You have to think out of the box. You can't say, oh, poor me, I didn't have a rich father to help me. Right? I won't be able to make it. You have to have the attitude that you can make it. What is this attitude like? Let me give you an example. Walk into the bathroom and fill up the tub with water. Stick your head in the tub of water, right? And hold it there as long as you can, right? when you take your head out of the water, right, you're dying for a breath of air, for coming into your body. Right? If you want to earn wealth, that's the kind of attitude you have. This is something that you, like that breath of air, you must have it. You must have it. Or a poor man or a thief standing behind the wall, looking and knowing that in the other room, there's a room full of gold. And that thief will be up all night thinking about the gold. Well, if you want to become rich, that's the way you have to think. You have to think about this all the time. This isn't a part-time job. It's a full-time job. So what are the characteristics?
Stan, thank you. We have to give some time to the other. This is brilliant. What a way to start the webinar. I mean, if somebody is not already incentivized to make a lot of money, to create real wealth, to empower others, you shouldn't be here. This is the attitude. This is the attitude we have here. This is the spirit we want to build. So I'd like to ask maybe other board members if they want to weigh in to what Stan said here, then we can move to the next question. Please keep it brief. Let's make it 2 minutes each because we still have a lot of questions here. Thank you so much, Stan. Brilliant. Anybody wants to add anything?
I want to add one last thing, Ziad, please.
Yeah.
Right? Most important, I think, when you look at all of this, one of the most important things that you have to have is you need to have someone to help you to grow and to develop your wealth. And that involves forging valuable relationships with individuals who have either created the wealth or aspire to be so. Right? A white cloth is dyed by what it's dipped in. If you want to be wealthy, hang out with wealthy people, listen to them, talk to them, and let them mentor you.
Brilliant. At the end of the day, you become the average of the 5 people closest to you. Remember that. So if you hang out with losers, you're going to be a loser. It's going to rub on you. If you hang up with real, bigger than life type of people, you're going to become like that. Maybe not to their level, but very close to their level. Anyway, I move to question number.
Just a quick comment. And basically,
of course, Barry.
Sure. So I was going to say that just to piggyback on what Stan said, wealth is truly a state of mind. And what I mean by that, I'll be real quick, is that anybody can be wealthy, as Stan was saying. Point being is you don't need to wait for somebody to give you something. Just get started. Find something, take hold of it with passion and vigor and go after it. And you have a chance like anybody else to be wealthy. So that's a big misconception.
Yeah, let me add a couple of things to what Bret and Stan has mentioned. Genetically, the human race itself is identical, like very close, very close. If somebody could become, as Stan was mentioning, the statistics, millionaires and billionaires, and you have the equal opportunity to do that. Only thing probably you are missing is the resources needed or the mentorship, as Barry was mentioning. And Financial Policy Council is here to provide those resources. Whether you need money, we will provide you some guidance where to go get the money. And also we have enough experienced people here to provide you the mentorship needed for you to succeed and become a millionaire or a billionaire. That's what I would like to give you on behalf of the Financial Policy Council.
Thank you, Harry. Thank you, Harry. Brilliant, guys. Let me move to the next question. I'd like to ask this question mostly to Bret, Siarkowski, and Vladimir Lunego. Question is, why entrepreneurism is the best future for capitalism and wealth creation? Since both of you are very accomplished self-starters and entrepreneurs, starting from scratch. I'd like to hear your feedback on that. You can start with Bret.
Sure. Okay. So I'm going to give you the short answer, and then I'll give you a little bit of background. I feel that, and this is true, this is a fact, entrepreneurs are really the engine of capitalism. Okay. And entrepreneurs have created the world's greatest economy. It's the key to creating wealth, and it's accessible to an average person. But to paint a little bit of the background, why I say that, I want to illustrate there's a time when we can really compare a 20-year segment to another 20-year segment with and without a big focus on entrepreneurs. So when anybody that served during the time of President Reagan, he signed a bill that reduced the capital gains from 28% down to 20%. And it unlocked venture capital or risk capital to put money into entrepreneurs and new startups and new ventures. During the 20 years, that time frame, after that was signed, entrepreneurs created the longest, economic growth in the country's history. What we saw during that time, I think it was over 27 million jobs were created, and 24 million of those jobs were created by entrepreneurs, whether it's a small or a medium-sized, growth venture. So that was pretty amazing. But not only that, I think there was success at the the IRS collected, I think, 28% more in revenue. And if you look at the, I think the Dow Jones during the 20-year period after that went up about an annual return of 11%, where the prior 20 years, it was only 1% annually. So that in and of itself, right, for capitalism to succeed, you need three things for it to thrive. You need competition, growth, and innovation. And guess what? Entrepreneurs have all of that. They're naturally competitive. They think outside of the box. Okay, so that's really, when my takeaway is that today is the best time to be an entrepreneur. Why? We have access to unlimited information with the internet. There's courses like Ziad's course. There's success stories. There's technology infrastructure to start technology companies. You don't have to start from scratch. Entrepreneurs can build ventures with lower capital today. They can have a much faster time to market and global reach and huge return on investment. So there's no better time to be an entrepreneur than now, and it is the best fuel for capitalism.
Thank you so much, Brett. Very well articulated. I'd like to leave the floor to Vladimir here.
Yeah, hard to top that answer. So I'll probably go a little bit of a personal route. My career started in the year 2000 when I graduated from the London School of Economics. I had my fair share of decisions in my life in terms of career, and I ended up in consulting. So I worked in 3 out of the big four firms globally. And then I realized that as far as entrepreneurship is concerned or wealth creation is concerned, this was the dead end. This was absolutely the dead end. If you work for someone else and you're not an entrepreneur, this cannot lead to wealth creation. And that's why together with some of my friends and co-founders, I've created mBank, and we are a pioneer in digital banking technology. So entrepreneurship has led me to mBank. And now we have patented multi-currency accounts, just like I mentioned before. And we're able to transact in any asset class and really drive innovation to the next level. So blockchain and other proprietary technology that now constitutes our knowledge and our knowledge base is in fact something that led me to entrepreneurship. And as an entrepreneur, I get to choose who I work with. I get to choose who I socialize with. I get to choose who my clients are. I get to choose who my investors are. It's the ultimate freedom that you can get. And now is the best time to do it.
Thank you so much, Vlad. Really appreciate it. Okay, I'm going to move to another topic here. We're going to cover, by the way, all your questions about stock market, SPACs, everything. So don't worry about that. We're just starting. We're just warming up. Okay. So I can imagine what your questions are.
Ziad, I'd like to add to that, to the entrepreneurship topic.
Please.
Yes, I think one thing that no one talked about is the concept of risk, right? And I think that's why being an entrepreneur is so important for a nation, because there's risk. When you start something, when you build a company, anything that you do, there are consequences to your decisions. So you don't take it lightly. You're under a lot of stress. The company that you build, the solutions that you build, are tested by the world, and most of the times they're gonna knock you down. They're gonna, swat your ideas. They're gonna try to bury them, not give them a space in the new reality, so to speak. So those solutions are going to be strong, they're going to be rooted, so to speak. The reason why I wanted to say that is because now the new administration, for example, you see they're talking about the new infrastructure plan, the New Deal, et cetera. $100 billion to redo the roads, 100 billions. I mean, anything under the sun, they're going to just throw money at it. How much do you want to bet that none of those projects will be done on time? None of those projects will be done on budget, and it will just be a big mess. Something that should take a year will take 10. And you know why? Because there's no consequences. If they waste all the money in the world, there's no consequences for them. They don't lose, if anything, 4 years later, they might get voted out, but that's it. Most of the times these governors, politicians, et cetera, they're just there forever, and they'll blame it on everything and anything else. So the way to build something strong, something solid, something that's rooted is through entrepreneurship, because that comes with the risk, with the stress, with the consequences, and that's what makes it strong.
Absolutely, Paul. If you want something to fail, give it to the government. It's throughout history.
Hey,
right.
Ziad, just to add real quick.
Yeah, who's this?
It's Barry.
Oh, yes, Barry, go ahead.
I'm on the board now. I'm on the panel.
Your picture moves, go ahead.
Real quick, I started my core company, Computronics, my IT firm, as I said, over 20 years ago. When I did it, I had to get out there and go door to door to find people, skilled labor, money, resources, everything. Today, and it was brought up earlier, because of technology, anybody can start a company and find the resources they need, the money, and most importantly, the relationships. And you find it through things like the FPC or things like LinkedIn. You'll find anything you need, and it's all at your fingertips. So it's a phenomenal time to be an entrepreneur. Just get out there and do it. Learn from this group here. Very powerful.
Frankly, there's never been a time where you can make more money than today.
Absolutely.
I mean, honestly, between all the asset classes, all this class of entrepreneurship, never been in history of the United States any time better than that. Okay, let me move on some other questions, because we can still talk about this for a long time, but I know you have a lot of questions, a lot of things are running in your mind. So I'd like to direct this question mostly to Barry and Stan. The question is, what are some recommendations to preserve wealth? The Fed, as you know, continues to printing money. Fiat money is becoming useless. I mean, where should people invest, and in what asset class in general? We can talk about this for hours. I can talk about this for 5 hours, but let's make it very laser-like focused, your initial opinion, and we will elaborate on that later on. People are very scared. They're going into different asset classes. The dollar is worth nothing. It has depreciated 94% for the last 100 years, or less than that. So if I can start with Stan, then move to Barry, then of course every member is always welcome.
Okay, well, quickly, since the Federal Reserve was created over 100 years ago, the dollar's lost 97% of its purchasing power.
Yeah.
Looking at last year, you're looking at a very atypical year. If you look at the asset classes, the best performers were, of course, the large caps. They're up over 40%. The small caps, growth stocks are up 35%. The micro caps are up almost 26%. Gold is up 25%, and total stocks are up 21%. When you look at where money should be placed in terms of different asset classes, when you look at what's going on in the marketplace at this point in time, I would say that with the money being spent by the Fed last week, as we're aware, Congress passed a $2 trillion rescue package. There's an extra $330 billion coming from the British government, $250 billion from the Bank of England, $814 billion from the European Central Bank. That's $7 trillion in money going into the market. Money doesn't come for free. I think really it's a no-brainer. If you want to deal with what's going on right now, buy gold and Bitcoin digital currency.
Thank you, Stan. Barry?
Sure, and I have to agree with Stan. Obviously, I know we have some questions a little further on the stock market asset classes as well as beyond Bitcoin, which I can't wait to talk about. But yes,
Yeah.
the answer is the world is changing. The normal asset classes we know about, which most of us are involved in, whether it is equities, real estate and such, you need to have a foundation in all those things because that's what makes the world go round. But the world is changing and new things are being introduced. And again, referring to the fact of what technology has done for us and the ability to bring people together, which is one of the most important components of anything we do, is getting around the right people, learning from the right people, and tapping into resources of the right people. You need to get into other asset classes. So what does that mean? I'm all about technology and blockchain. These things did not exist many years ago. You got to look at the other asset classes. They're moving very fast and they change. There's a lot of volatility. You got to know what you're doing. These new ones, you can be on the cutting edge with everybody else.
Thank you, Barry. I totally agree with you, Barry. You know that. All right, let's talk about jobs a bit, reskilling. I mean, obviously, due to COVID-19, 2 out of every 5 jobs lost will not come back in the same field. We all know that. There's a huge need for upskilling and reskilling. How do you see the employment recovery will happen, and what sector will thrive in a prolonged lockdown? So this question really is for Harry, who's been through that extensively, and Henry to a certain extent. Go ahead, Harry.
Harry, you mute.
Sorry, go ahead. Harry, we can't hear you.
Yes, got it. Thank you. Thank you, Ziad, for the opportunity and a great question. This is the need of the hour for all of us. Just to give you a perspective of where we are today with the COVID. So I see the numbers, 143 million people worldwide with COVID impacted. Over 3 million people died, and USA is the leading, unfortunately, and just followed by India and Brazil. So this is very sad, but we need to take this as an opportunity for us. So again, there's some pundits predicting that cost of COVID-19 is estimated to be about $82 trillion over the next 5 years. As Ziad was mentioning, 2 out of every jobs lost may not come back in the same area. So this is definitely an opportunity for all of us. So there will be a reduced liquidity in the market and increased borrowing cost. There will be inequality gap widens in the society that may lead into political unrest. And as for the UNESCO, we have about 1.5 billion students around the world are affected. So the pandemic has created an opportunity and undeniable challenge as well, my friends. This may require partnerships between institutions of developed and developing countries to share knowledge and resources to upskill and reskill the displaced people, in my view, with Industry 4.0 technologies like artificial intelligence, blockchain, genetic testing, 5G technology, augmented and virtual reality, cybersecurity, autonomous and electric vehicles, and finally, smart cities. So this is what I feel is appropriate to do. And coming into this, how various countries can handle this, and all the countries definitely cannot handle because they exhausted their resources for treating the COVID and various other things that they are currently facing. The United Nations, which was established on October 24, 1945, which just celebrated last year's 75th anniversary. Their UN launched Millennium Development Goals or Sustainable Development Goals, which required $5 to $7 trillion. They cannot do it either. So the responsibility and opportunity falls on us as entrepreneurs. So this is a great place for us to be. And again, just to repeat, I'm a very strong proponent of the technology. And in that space, I repeat again, artificial intelligence tops my list, then blockchain technology, including the various cryptocurrencies and genetic testing, 5G technology, augmented and virtual reality, cybersecurity, autonomous and electric vehicles, and finally, developing smart cities. Ziad, back to you.
Thank you, Harry. Thank you very much. I'd like to add something here to what Harry said before I pass the baton to Henry. Look, at the end of the day, you really look around, generation after generation. There's this obsession by the government about jobs, creating jobs. I think this is the wrong way of looking at things. I am being very controversial. The way to look at it is to create an environment that's conducive to wealth creation, not robots slaving for jobs, relying on the government nonstop for jobs, and attacking the wealth creation process, locking down, putting out of business entrepreneurs. That's not the way to go. It's not, we're not creating a mass factory here. You guys are human beings, not robots. And people now, they tell them, hey, don't think, stay at home, work for big companies, obey orders. You're never gonna go anywhere with this strategy. And life is too short. And this is what you regret. This is the best time ever to become an entrepreneur, to network with like-minded people, to create wealth and opportunities. Henry, back to you.
Hey, Ziad. Thank you, Harry. You took all my points. Great explanation. So other than the points that Harry explained, I would like to hit on the e-commerce. I believe there's a big industry that is producing a lot of money for a lot of individuals taking advantage of that. And going along the lines to technology, telehealth is a big one right now. Me as a chiropractor, I cannot do telehealth because I need to work on my hands. But medical doctors, physician assistants, they can get taking advantage of that to prescribe and take history taken, whatever they're doing. And telehealth companies is definitely a big way to invest. For that, you need IT and you need cybersecurity, right? The more doors you open for cyber attacks, they're going to take advantage of that. And that's all I have on that question, Ziad. Harry took it all.
Okay, thank you. Thank you, Henry. All right, a couple of more questions before we move to your questions, audience. Let's talk a little bit about the stock market. I mean, is it still a viable short, medium-term wealth creation strategy? Manipulation is obviously running wild. Or should we focus on commodities and other asset classes? Are they better choices? Monies is going up the gazoo. I'd like to hear from all board members here, about that briefly, about stock market, and then we can address the Bitcoin boat. Is it the next hot blockchain technology to get into right now? What is the next best blockchain technology to get in right now? So I think these two asset classes, stock market, blockchain, now they're moving in tandem because the dollar is still strong. The way I look at it is that the dollar is the big whale, and all the other classes are the classes moving with the dollar. So if the dollar gets hit, everything's going to get hit. I'd like to hear the opinion of the other board members on that, please. We can start with Barry.
Sure. I'm just going to give you a quick few comments on the stock market because I know we have a lot to say. Volatility is out there. Anybody getting involved with the stock market has to decide, am I in it for the long term or am I in it for the short term? This is no rocket science. People know this. Volatility is great, phenomenal right now for traders, and real traders will go where the money and the volatility is. So whether it is in the stocks, the equities, the commodities, wherever it may be, the traders will go after it. But for those who are looking to still get in the stock market, I mean, look at it from a big picture. You can't compete with the real traders who know what they're doing with the manipulation. Look at the e-commerce stocks, look at the tech stocks that give competitive edges. Stay global, stay big, not so much global, but stay big. So you're catching on to trends. If you try to compete with the professional traders, you will lose. I'll turn
Thank
it over
you.
to Lynn.
Let me add, Ziad, let me add a
Go ahead,
little
go
bit.
ahead.
Yeah, on December 31st, 1970, the Dow Jones Industrial Average closed at 838.92. December 31st, 2020, it's 30,538.44. Today, I'm just looking at it, it is closed at 33,821.30. So this is again purely possibly a manipulation of money moving from left to right, but that may not have created the real wealth in the pockets of the entrepreneurs that are aspiring to become entrepreneurs. So this is definitely a market manipulation in some case, but again, this need to be considered as an opportunity for all of us to see how do we create wealth of our own rather than creating the wealth for these large corporations, which is driving the Dow Jones Industrial Average. I just wanted to bring that perspective to you. So what is your stake in it? How many millions you have in your pocket that matters? So I encourage each one of you to think on those lines and become an entrepreneur so that you create wealth, you generate the employment, and you make a difference in the world. Either if you want to reduce the global warming, come up with some technology and look into the impact investing where these opportunities are globally. Think global and act local. That's what I feel.
Brilliant.
I want to add one thing to that, Ziad,
Yes,
and that
sure.
is predictions are hard, but if you're going to predict 1921, predict that it's going to be unexpected. So if you're going to invest, just make sure it's not short-term investments. Invest for the long term and not for the short term where you're going to get killed. And the only other thing I would say in this area is I think the most important investment that anyone can do, if you haven't done it already, is go out and buy a house. If you invest in a home, as I've said before, real estate was the #1 area that people were able to increase their wealth. Buy one house, buy a fixer-up house, try to make your money over the long run in real estate. You will increase in value over time. Just keep at it and work at it hard.
Thank you, Sam.
Yeah, I like to add to that too. And one thing that I'm surprised no one mentioned is it's essential services, right? COVID was a huge stress test for the world, and a lot of companies went out of business. You know, the tide came in, the tide went out, and you saw who was without pants. Essential services companies were basically the roaches of, you know, you can't kill them, they're essential. And then once you look into that, once you narrow down the industries like telecommunications, you know, cannabis was an essential service, try to understand which companies actually have a chance to succeed and to thrive in these conditions. It's probably one of the best times to look at it. And I'll give you an example. Once when COVID hit and everyone was working from home, you had Zoom and then you had Skype. And Skype has been preparing for this moment their entire company lifetime, but for some reason they just went into security and everyone started to use Zoom. So telecommunications, for example, is a great industry asset class to look into, but even so, you have to look into it a little more. You can't just say that a company is in that industry and just invest money. And it's the same thing in cannabis. A lot of investors they think just because the cannabis industry is growing at almost unprecedented rates, they think that, oh, as long as I have some cannabis companies invested in, I'm good. But there's a huge difference in the ones that are doing well and the ones that do nothing.
Thank you, Paul. All right, I have one more question to the board, and then we can move to your questions, audience, which I'm sure you have a lot. It's really about a different thing. It's talking about the future of the coal, nuclear, versus the so-called green energy, which everybody's talking about. Should we invest to maintain coal and nuclear energy rather than keep pushing for any green energy solution? What's your take on that?
Me?
Who's that for? For me?
We start with Stan.
Stan? I think nuclear power, in my mind, is the only energy source that delivers carbon-free, reliable energy 24 hours a day. And so if I were to look at this, I would say that looking in the future, nuclear energy as well as geothermal energy, two energy sources where you're not using a lot of natural resources and will last for a long time. They have their issues, but I think that technology and entrepreneurship over time will make these two of the fastest growing areas and leading to cleaner air and covering and aiding in issues of global warming.
So
Thank you.
Ziad, this is something very close to my heart. I add a couple of things. In addition to what Stan was mentioning, my favorites are solar and wind energies. Harvesting these energies sectors is a great thing to invest into. And that will also contribute, if you are environmentally conscious, for the global warming to reduce to whatever the levels that we are looking for life to exist on this planet. I strongly believe those two sectors will flourish as the technology develops and the cost of building these solar and wind plants becomes cheaper and cheaper. I think that will be the way to go. And the governments should facilitate. Government should not be in those businesses, but they should deregulate as much as possible and have the equal opportunity for all the private players to trade energy in this sector and get connected to the grids. All those things will definitely reduce the cost of production as well as distribution and reduce the wastages as well. I strongly believe that's a big space to be all the new people that they want to hop onto.
Thank you. Anyone else wants to weigh in?
Yeah, go ahead, Henry. Sorry.
Oh, sorry. Okay, so we just went to the Arctic blast here in Texas a month ago, or however long it was, 2 months ago. And we took a big hit for several reasons. I mean, some of the power plants here were under maintenance in the middle of the winter, but the biggest hit was because what they call green energy, wind, solar did not work. It doesn't work when you're having a weather change like that. The wind turbines froze. They were not producing, and they were supposed to produce 20% of the energy for Texas. Well, 17 people died here in the state. And I had a private meeting with Sim Miller. He's the Texas Agriculture Commissioner for Texas, right? He has a big influence on what goes on in the state, and he was, livid because the situation that Biden pushed, how do you call it, emission controls to lower the coal burning, and that's what caused the whole state, literally the whole state of Texas was with no power. So I agree and disagree a little bit with you, Harry. We need to focus as a subscriber to subscribe to coal, and as an investor to invest in EMP technologies that are going to protect the grid from EMP attacks. That will be a huge investment for the future, I believe.
Yeah. So I strongly believe in providing the microgrids, Henry. So that's the reason where this wind and solars come into play, where you produce the power locally and consume the power locally. So even the grid fails, you have power in your areas. That's another way I'm looking at this, and I'm investing big way in this space myself, especially in the emerging countries, need not be in the US.
Good.
Okay, thank you. So we've spent already an hour talking about these issues. So we're going to leave the next hour for Q&A from the audience.
Ziad?
Yes?
If I can just interrupt you for 1 minute. One of the things I know we were going to touch on, and we kind of jumped over it, is what's beyond Bitcoin. We didn't even mention that. Can I take just 2 minutes to go over that?
Please go ahead.
Sure. So, and I'll do it quickly. So real quick, everybody remembers when everybody was saying the internet was for geeks, only a fad, not for everyday people. We all remember that. Look where we are now. We all lived through the birth of the internet. Now you actually have another chance with what's known as blockchain to do phenomenal, make a lot of money. The truth is, with crypto, which is the new world we talk about crypto, fractional ownership, blockchain. Most coins and tokens are pure speculative at this point. They have no value. You got to find ones that have real use case over time to make the token of value. By the way, PayPal, Venmo just opened to 70 million people for crypto. So let's talk beyond Bitcoin for just 1 minute. I'm going to touch on 3 areas. The first one is tokenization. Tokenization is basically a digital representation, fractional digital representation of securities representing digital asset, physical assets, excuse me. 2 examples, physical art is being tokenized, meaning they divide it up and give people digital ownership. And the other one is real estate, like companies like REI Capital Growth, which is offering fractional digital ownership in hundreds of millions of dollars worth of commercial real estate. So look into tokenization. It's something everybody can get into now, owning real estate at a fraction digitally. Number 2, NFTs. This is all beyond Bitcoin. NFTs are known as what's known as non-fungible tokens. Basically, it's a digital representation of a unique asset. It's unique because every NFT, non-fungible token, is not the same as the other. Think of playing cards. One is of one sports figure, the other one's of a different sports figure. Virtual real estate is NFTs. There's virtual real estate you can buy online now. You can own virtual real estate. Decentraland or the Sandbox are 2 locations. The other thing is these NFTs, which is hot now, are digital art. And one was sold for $70 million at a Christie's auction. That's services like Nifty Gateway, things like that. Look into NFTs. The last thing, which is going to be the biggest for blockchain, is called DeFi, decentralized finance. Basically, it's finance using the blockchain and removing middlemen like the bank, where we can do finance between us directly. And 3 basic things you can do with that, and I'll finish with this, is you can be a liquidity provider, meaning you can earn interest and fees by loaning your crypto out. Number 2, you can be an investor, like we're doing, everybody's buying Bitcoin and investing. Or number 3, you can basically be a pool participant. You can help govern the way finance will happen in the future. So DeFi is decentralized, safe, easy, and requires very minimal investment. Look into those 3 things: tokenization, DeFi, and NFTs.
Thank you, Barry. I'd like to add the final note here. I'm really focusing right now very much on leverage finance and crypto. I really strongly believe this is where the money is. This is where the big bucks are. Throughout history, all the big fortunes were made by knowing how to use leverage, knowing how to use debt, going into, I think, the crypto world, and I'm having a lot of advisors, friends advising on that. Yeah, people tell you have to have 1% of your portfolio. Yeah, you can do whatever you want, but I'm having approximately 40% of my portfolio in crypto. So, and I'm waiting. It's gonna, I don't want to predict what's gonna happen, but I think we're still starting. This is a very early stage. This is gonna be a bonanza. So it really depends how fast you want to hit that number that you want or not. But think about it. At the end of the day, you have to invest early. You have to be all the time invested, not in savings account. You cannot rely on your job. You have to start your company. You have to know how to use leverage. These are some of the most salient points we talked about here, which we can elaborate much more, but we only have 1 hour. So anyway, having said that, I'd like to give the baton to Christina to ask us the questions from the audience on a select basis. We have approximately 1 hour to address these questions, and it's going to be addressed to all the board members, unless you want somebody specific to answer your question. Go ahead, Christina.
Yeah, thank you so much, Ziad. I just want to say that we have lots of questions coming in from over 100 members attendees that have joined us this evening. I think what I'm going to do is just start.
I'm sorry to interrupt. You know very well that we cannot answer 100 questions. So you have to be very selective.
Yeah, so I'm going to be picky. And in most cases, I will read out loud the person who asked the question, where they're dialing in from, as well as the question. There are a few VIPs that we have on this call where I would like to, not saying that those that I don't announce won't be a VIP specifically, but there are certain individuals that I would like to have introduce themselves as well and then present their question, because they are experts in their field. But I'm going to start with some of the more general, simpler questions that are relevant, I'd say, to all of us on this call, and then get into the nitty-gritty. So first of all, thanks everyone again for joining. I think the most appropriate first question to ask is from Miss Angela Cooperman. Sorry, don't know where you're calling in from, but
I know where Angela's coming from, but go ahead.
Okay, she asks, my 16-year-old son, Eli, just said to me he is not old enough to be an entrepreneur. What advice would the panel advise, or what advice does the panel have in advising a young person who's interested in becoming an entrepreneur, but may feel they are limited by their age?
Okay, then let me start with this. I'll leave it to the rest board member. There's no age to start. That's wrong. He's not old enough. No, because he can tap into a lot of resources around him and learn very fast. You know, there's no such thing. You cannot define someone. I mean, you know, Mark Zuckerberg, Bill Gates dropped from Harvard and started two giants. And of course, maybe he's not going to aim to be the next Bill Gates or Mark Zuckerberg, but he can start something pretty consistent. Don't limit yourself. You know what? The world is your oyster. Don't limit yourself to anything. Don't believe what these guys try to tell you. Oh, slow down. Oh, be more accepting how the world is. No. Defy everything. You live once. Be bold. Take a lot of risks. Look, let me tell you something. My father, I got this from my father a long time ago, and I never forgot what he told me in advice. He tells me, you know, in your teens, you know, if you can start something in your teens or learn how to make money in your teens, have it made. Because even if you fail, you're still a teenager. You're going to learn from that. You only learn from your failures. You're not going to learn from your successes. It's going to go up to your head. You think you're too smart and that you don't make mistakes. You're invulnerable. Make mistakes, fail, keep failing, because every time you bounce back, you're going to be stronger and stronger. There's no age for that. That's my conclusion. And I've been through that. I started my first business, you know, while I was working at the job. So, and I started and funded over 150 companies in my life, in my career. So no, it's not true at all. Don't let him, push him. Don't limit him whatsoever.
Hey, Christina,
let me add.
I have three boys. I have a 11-year-old boy who actually has his own YouTube channel who sells merchandise. He created face masks with his logo on it and sold them at 11 years old. My 16-year-old, he plays video games and gets paid when people watch him. My 22-year-old just graduated college, and he started his own online digital agency, and he's doing better than I did in the first 5-10 years of my business. So get him out there, let him find what his passion is, and let him get started and taste, because he's going to fail a lot, like we all do.
Exactly, love it.
Yeah, I just want to add what Barry was mentioning. Yeah, let them pursue their passion to be successful in life. I'll just share my own personal experience. My wife is a physician, and she wanted one of our child to become a doctor, but both the children wanted to go to University of Chicago. One at the Booth School, one is just graduated with business and economics degree. So both of them wanted to pursue their own passion. So you cannot limit them. So let them be who they want to be. I'm sure if they pursue their passion, they will be successful in life and they'll be happy about it.
I want to add something also to this, Ziad, and that is for a 16-year-old, he's a sophomore in high school, let him do his homework. If he has an idea, let him write it down on paper. Let him do the research to get all the information he can about his idea, about what it'll cost to do it, about if no one has done it before, let him then talk to some people once he's formalized in his mind what the idea is. but logical thinking, sticking to it, not giving up, and getting information about how to proceed, and then getting a mentor to work with them to help them to succeed.
Sorry, good. I would also, can I just chip in? I would also mention soft skills, like leadership skills. That's something that school cannot teach at that age. So you need to get out there, try to find people, followers, real people, try to communicate and learn those leadership skills and soft skills.
Thank you. Next question, Christina.
Yeah, I'll say
We have a lot to cover.
exactly. Thank you so much. And I feel like I definitely have to ask this question. Unfortunately, I don't know his last name, but there's an Elliot out there in the room. Like the second this session started, I got this question. So he would like to direct this question to Bret specifically. He would like Bret's thoughts on SPACs, or special purpose acquisition companies.
Sure. I'm a big fan. The reality is today, I think there's so many different types of investment vehicles, but a SPAC basically gives you an opportunity to participate. Even sometimes, you just, as long as you're a accredited investor, you can invest in those, and you get, a nice piece. I'm a fan.
What are you buying when you buy a SPAC?
Well, you're buying a slice of, you're not putting the whole thing together. So basically you're buying just kind of a piece of ownership of this vehicle.
Of an idea, right? Nothing concrete.
It could be concrete. Yeah. It doesn't have to be just an idea.
Okay, let me give you my opinion on SPAC. I beg to differ completely from what Bret is saying.
Same here.
I'll tell you why. I'll tell you why. I'm sorry, who's this?
Elliot Warren.
Yeah, Elliot. Yes, Elliot. I'll tell you why. Number one, I never ever gave my money to invest in a fund, because all these people are not more capable than me. Honestly, with all humbleness, I mean, they're not more capable. And then in SPACs, a lot of people raise all this money, and I've seen it a lot. There is nothing for them to invest in. They don't know. Look, I tell you, most of these funds are good at raising money. Whether the private equity funds, the SPAC fund, the public funds, etc. They're all geniuses at raising money and charging fees. When it comes to allocate the money, they're not deal guys. They're marketing guys. There's a big difference between a deal guy and a marketing guy. They raise all this money. There's no way, no place, no, not all of them, but for a big part of them, to put this money to work. So they have to dismantle that SPAC or that fund because they didn't find the right opportunity, because the competition is fierce from a lot of people. They all do the same thing. They all follow each other. You see, there's a difference. The smart people do that. The super smart people go and create their own path. They don't have to compete with them. Let them kill each other and eat the crumbs. You don't have to do that. This is the thing on Wall Street. Everybody imitates and say, oh, he did this, I should do this. I am totally against SPACs, funds, public funds, private funds, real estate funds, etc.
Really? I ran the energy desk for a small cap hedge fund for 20 years. They were pretty reliably honest. I got to be honest with you.
No, I mean, look, I'm not saying, Elliot, all of them are like this, but for the most part, I mean, a lot of hedge funds are very smart. They know that, but for the most part, I've seen it. I mean, you don't know how many people came and told me that invest in this SPAC, invest in that SPAC. I did it once, and the guy still didn't find an opportunity. He dismantled his fund.
I agree with you on SPACs. I agree, actually. Yeah, very much.
Anyway, we can move to the next question, Christina. I think we got the answer.
Thank
Christina.
you.
I would like to unmute myself. Sorry about that. We also have Stephen Mead calling in from Beverly Hills, and he had a couple questions and points, and I actually would like to have him unmute himself and ask the question and present his, I'd say, response himself.
Of course.
Yeah, thanks, Christina. Thanks, Ziad, as always. I think it was a little less of a question and more so of an input. I was a broker at Travelers Group at age 22. I've taken 3 companies public in the OTC market, so I understand risk profiles in investing. And now we've got an award-winning blockchain company. So we actually put a program together that'll launch in Dubai, where we didn't look at asset classes. That was the conversation earlier, is what asset class. I reverse engineer it, and we're launching a platform that's basically, what's your risk profile? Is it low, medium, or high? Allocate money into low, medium, or high, and then that low, medium, and high asset allocation acts like a mutual fund. So a retail investor doesn't have to fully understand the asset class. They're not picking a segment. They're saying, I want my risk profile and volatility to be low. The manager will pick that allocation, and then the investor can look at that. The high risk allocation is going to be more, low stage OTC crypto type tokens, staking, a lot of things that are much more aggressive, but that risk profile is something more important than asset allocation. And so that was a little more of my comment than the actual question. And there was some other ones in there, but I don't want to cannibalize the conversation. So Christina, I'll throw it back to you.
Yeah, no, thank you so much. Go ahead, Ziad.
No, I said, thank you, Stephen. I get you. No, look, it makes a lot of sense, but it really depends what your end goal is. Is it a question of gathering assets? It's a question of gathering assets from them. That's a way to gather a lot of assets. Or is it a question of performance? Or it really depends what the end game is, But I understand what you're saying. It makes sense. Next, Christina.
Sure. I have a question from Sean Cutler, based in New Jersey, and he asks, in 2021 and moving forward with wealth preservation and growth in mind, where are smart investors investing their extra capital with tax optimization in mind? Specifically, say you're in the $500,000 to $2 million range investment area with a 1 to 5 year horizon. Yeah, what would be your recommendation?
Okay, I have some thoughts on this. I'd like to hear from the other board members whom I value their opinion too. Look, when it comes to this size deals, which is not very big, I look a lot at the people, the operators, more than the play itself, because there was a lot of risk when you invest that early stage. So you better be really sure that you're dealing with real kick-ass people with a track record, with skin in the game. A lot of these people don't have skin in the game because they don't have money, because they never made money. I rarely invest in people who never made money. I'll tell you, it's easy. Even if you had $100 million and you lost it, you can make it again. If you never made money in your life, it's unlikely that he's going to make money on your watch. So look at their track record. Look at their skin in the game, how much they have. Look at their vision, their business plan, and how they're going to execute. Not the what, the why, the when, the where. How. People at that early stage, they have no clue how they're going to execute. They're going to rely on something that's, big ads, revenue model, or this or that. How they're going to execute, how have they executed, how much money they have, how they're going to make money. A question, very confrontational. I asked them, how much money do you have? They're shocked. Or how you yeah, it's not intrusive. I want to see what you've done. I want to see what's in your gut. I want to see what you've accomplished, especially that early stage. Don't look at industry and technology. What technology? You don't invest in technology. You invest in people. I don't invest in technologies and themes and geography. I invest in people. I work with a lot of transactions with Harry. He knows it's all about people. A lot of guys, throw the big names, and this doesn't mean shit.
Yeah, I echo that, Ziad. Definitely, people make a difference. So you want to believe in people, and you want to do the due diligence on the people, not on anything else. Once you verify them, their backgrounds and their abilities and their processes, then I think you invest into that comfortably than investing in anything else.
Okay, next question.
Thanks again. I have a question actually from my former CEO, Mr. P.O. Johannesson, calling in from Sweden, actually. So it's quite late there. And I think we have a couple people from Sweden dialing in tonight. He asked, while I think the EVs will take over the entire vehicle industry, the amount of capital chasing the sector has reached absurd levels, and the signs of a sharp and devastatingly painful correction are everywhere.
I'm sorry. 1 second. What did you say beginning? The what? The ED? What is the ED?
Oh, sorry, electrical vehicle. So I'll reread.
Okay,
I'll
I'm sorry.
reread the
EV.
question.
Yes.
Yeah.
I heard ED. Okay, gotcha.
Yeah. So while I think that electrical vehicles will take over the entire vehicle, or it's a automotive industry, the amount of capital chasing this sector has reached absurd levels, and the signs of a sharp and devastatingly painful correction are everywhere. Tesla's valuation is assuming that it wins around 40% of the entire market for electrical vehicles, which is something that is very, very unlikely to happen. Having said that, is Musk a modern Ponzi scheme? Sorry. Question to the board. So.
Okay, I mean, start. You want to start? Stan, you want to start? I have something to weigh in, but I don't want to start every time. Go ahead, Stan.
No, I don't want to start this one, Ziad. You know, I am not in favor of electric vehicles. I think the development time is...
Let me tell you. I mean, this is also the wrong way of looking at it, sir, because it's not the EV. You know, it's Elon Musk and what he's done. We're not all created equal. All this bullshit, we're all equal. It's not true. Elon Musk is going to be the first trillionaire. Either he loses this or not, it's okay. He has many other ventures, SpaceX, Tesla, etc. I wouldn't bet against Elon Musk. Yeah, maybe I would bet against the EV industry, you know, because a lot of guys are going to try to do this thing. They're going to fail. They don't have access to this money, this capital. They don't have Elon Musk's brain. They don't have anything like that. Once again, stop looking at industries and trends and this. Look at the people, analyze them, research them, work with them, meet with them, try to meet with them. This guy is beyond genius, Elon Musk. Much more than this guy is going to be the first trillionaire, either him or Jeff Bezos. So you don't bet against these people, whether the industry is doing this or that. That's my short answer. I would never bet against Elon Musk.
Thank you. I think a lot of people are going to take down those notes. So this question, I feel like would most appropriately be directed to Paul Vancea from FPC. I'm assuming he's the one that's cannabis centered. So the question is, based on the destigmatization of cannabis in the US and worldwide, how would you all explore private investment in the quickly evolving industry and supply chain? I would like for Paul to respond to that first.
Right. So the cannabis industry, you know, especially in specific states like Colorado, is becoming pretty mature. It's been 10 years plus. So I think the best way, if I was a private investor in this industry, and I work a lot, you find people with a proven track record and you look at grows, right? Cultivation grows. The entire industry starts with cultivation grows. The industry is still at its infancy, where they still haven't completed all the licenses, all the cultivations that there are going to be, right? It's like when you start a city, when you build a city from the ground up, first you start with the buildings, right? And after that, you come in with the innovations and with the bridges and with more, you know, the better technologies and so on. So grows, cultivations are the basis of that industry. You find people that have done it before. You have people that have, you know, $20 million, $100 million, $200 million worth of cannabis grown in metric, they can show you the records, and then you go and you hire them to build a grow for you. Grows, for example, there's a very specific equation. Once you build it, it's capital intensive, but once you build it, it literally just prints money, because there will always be need for cannabis, especially inside grows. You can control the entire environment. You can control the quality of the cannabis. It will always be the same. You can replicate very easily. It's not based on the weather or the sun or the wind, etc. It's not based on that. So once you set up a grow with minimal maintenance costs, you're literally just printing harvest after harvest after harvest. Even in Colorado, for example, where it's the most saturated, it's probably the most advanced industry out of all the states in the US, you can still make 400% on just pure cannabis. You cultivate something, you grow it at $300 per pound, you sell it at $1,200. And that's literally the minimum. You go to somewhere like Michigan or Massachusetts, you can, the cost to grow is the same, 300, 400, 500, but you sell it at much higher premiums. You can sell it at $5,000 a pound. You can sell it at, in Massachusetts at some point, it was $7,800 a pound. I mean, imagine if you spend $300 to cultivate it. So in the cannabis industry, as of right now, I know there's a lot of technologies and innovation, et cetera. That's fine. I think that will be important later. But as of today, they're still building infrastructure. All these licenses, for example, eventually, just like in Denver, there will be a moratorium on licenses, right? So not everyone will be able to grow. If there's only 500 grows in a state, that's it. Other people cannot come in. So the more grows, the more licenses you get, the more, basically, it's almost like a government contract. You are guaranteed to continue making that money over and over and over and over.
Brilliant. Next.
Yeah, thank you. I have a question from, I don't know if it's his real name. I'm assuming it's somewhat of an alias, Alex Player. And then if it's not an alias, my apologies. So I think this is a question that a lot of people, especially kind of newbies to the investing space, or just everyone, would really like an answer to. And this is really directed to the entire panel. How do people find potential tech companies who might hit it big early? Blockchain, tokenization, or other kinds of tech companies? Like, what's your secret sauce in being able to kind of 3 years before everyone else know that Uber is going to be the next Uber or Lyft or Airbnb, etc.? I think a lot of people would be really interested to find out what your thoughts are regarding this.
Let me tell you my thoughts on this. Okay, this is not easy. You have to operate. Look, in business for me is war. This is not a hobby. A lot of people take it as a hobby. I think because they're going to work a 9-to-5 job, that they're running a business. Business is war. And you know what it takes to win wars? It is not how smart you are. A lot of smart people out there. A lot of them even smarter than you. There are a lot of people with big war chests, billions and billions of dollars, like all these funds raised by marketing people who have known nothing about the deal business. What differentiates the big boys, the smartest people, the smartest investor from the rest, is access to intelligence. I run my office, operate with my people like I work for the CIA. I need to know stuff that nobody knows. So I have two people allocating all their time for research. They cut newspapers. They follow tons of online, offline. They see exactly who the movers and shakers are. You have to spend the time doing that to know exactly who's operating where, what, and when. And based on that, you court those people. You see, at the end of the day, I do not follow a push strategy or sales call or anything like that. You know why? Because when you do that, You are on the defensive. And the guy you're approaching thinks he's too important and he's going to play, you know, the big boy and give you a hard time. I follow the pull strategy. I pull them in my direction by talking about things, by doing things that will get their attention. Whether they like it or not is not important. Doing the pull strategy for these people who I've targeted already, they don't know I've targeted them. I've targeted them already, and I pull them in my direction, and then we do the homework. It is really, it's all intelligence. The smartest people work like this, with gathering the real intelligence to do the right strike. I mean, give you an example. I mean, even in the Iraq war that we conducted, we had no intelligence. We went and, you know, lost 5,000 lives and trillions of dollars because it was done haphazardly without any intel. The same thing in business. Business is war. It's the military. And if you don't take it that seriously, with that kind of a discipline, it is a discipline, you like everybody else. Everybody else doing the same thing. Oh, they heard this nice rumor in the Wall Street Journal or this thing. When it's in the papers, you know, it's already too late. You have to go before that, really early. Do your homework. It's a lot of hard work. Unfortunately, a lot of people are too lazy or too stupid to do the hard work, and they think it's going to come by itself. Money doesn't come by itself. Opportunities don't come by itself, and people don't come by themselves. I mean, you can't. You really have to do the homework. It's really hard work. That's in my opinion. And it worked. It worked. I mean, I'll give you another example, okay? What I'm going to give you an example is really maverick, okay? For example, I was doing a deal in a country in Africa. I know nothing in Africa. I know nobody in Africa. How do I penetrate that market in no time and get all the captains of finance and industries' attention? How do you do that? You know, it takes years. Well, I'm not waiting for years. I want to do it in 6 months. So you know what I do? I went and looked at all the Ivy League graduates of the 10 top business schools who are graduating from Africa, Harvard, Stanford, Wharton, etc. I target these people. These people are or will be, a lot of them are African born, the next captains of industries and finance. You know, there's maybe around 50 of them. These are the smartest guys out there. They work like in the US, they have deadline, they have a specific way of working. I go and do a big event and invite them all. On the spot, I know the 50 top players in Africa, which somebody else would have taken years or decades to meet. And from there, you have a lot of brain power in the room. And you can basically discuss with these people, what is the next game in town? Whether, and this applies to not just Africa, you know, any city, country, etc. At the end of the day, I look again and again to people, brain power, network, entrepreneurs, killers, serial killers, not normal people. I don't want normal. Normal people bore me to death and they go nowhere.
Ziad, Stanford, I want to add something to that. If you're in Ziad's category and have Ziad's wealth, then I would do exactly what Ziad is doing and what he's saying. However, if you don't have that kind of wealth, invest in yourself. If you're going to be an entrepreneur, put the money into your own business. You're going to get the greatest return, because when you're working with your own money, you're going to put out the energy. You're going to do the work. You're going to find the people. Why? Because you have to. Right? In order to be successful, you have to put out the energy. So if you don't have, you know, $1 million or $500,000 to invest in yourself. Invest in your business.
Brilliant. Brilliant. These are the two ways.
Oh, Sorry, yeah, I thought I was still on mute. Quickly, speaking of Africa, we actually have one of our good friends, Dr. Patricia Zolantima. I hope I pronounced her name correctly, dialing in from the Democratic Republic of Congo, who's basically, you know, built an Uber for female drivers or female drivers for female passengers. Quickly, I would like to offer her the opportunity to ask a question. I don't know if she's still with us, but I definitely wanted to make sure to give her the floor in case she's still on the line.
It's great to see you here, Patricia.
Yes, I will. I'm so sorry. It's just because it's almost 11 here.
Go ahead,
Can you?
Patricia.
Thank you. So I'm very happy to be part of this. I don't have enough question because I was just amazing about all the discussion that we had. So thank you. If I have some of question, I will let you know. Thank you so much, Christina and Zed, for inviting me.
Okay, well, quickly, I will later on in the chat or in the email leave a link to the way that I found Dr. Zolantima was actually, I saw her in a documentary with like over 7 million views, and she's doing incredible things in Congo. So the other question I would like to ask is kind of a broad question from Jeremy. Is it Dials or Dials? Apologies if I'm butchering.
Jeremy Dials. He's part
Dials,
of the
yeah.
Group.
Okay, awesome. Regarding real estate, will property valuations be impacted by rising rates? And this is directed to the entire panel.
Well, I mean, Stanley, you're a real estate guy.
Stanley, if you need me to, I can give you a little more clarification on the question. So in 1978, my dad bought his first property, and the property cost $30,000. He paid 18% interest. Mm-hmm. He owns 250 properties today, and he still owns this same property that has a valuation of over $250,000, and he can refinance it for 3%. So is there a direct correlation between the Federal Reserve's Treasury bill and or pricing as it relates to being able to purchase real estate? If rates are low, does that ultimately mean that valuations are going to be high? Therefore, if the Fed Reserve comes out and actually starts raising rates in the next year, and or banks start raising rates in the next year to an obscene level, will valuations ultimately drop as it relates to owning commercial and or residential properties?
I personally, okay, now I get, thank you for clarifying, Jeremy. I personally don't think it's just a question of rate. It's a question of again and again, location, location, location. Look at New York City. Look at New York City, Jeremy. I mean, with all these thousands of people leaving, whatever the interest rates are, there's going to be a price, there's a valuation and of properties is going down the drain. Look at all these states, these blue states. Look at California. How many people are leaving? All the migration, New York, California, all these places. That's going to have a tremendous effect on the valuation, on the appraised value, etc. No matter what the interest rates are. It's not, look, the interest rate is a factor, but it's not the major factor. The major factor, again and again, job opportunities, location, growth opportunities, regulation, restrictions, lockdowns. All this stuff has a lot to do on the valuation. So it really depends a lot on where your properties or your dad's properties are located, much more than the interest rates, in my opinion.
Agreed.
No, thank you so much. I've had a lot of questions related to just cryptocurrency, blockchain in general, and I'd like to synthesize all of the main questions and points in one question. So this, but I'm gonna give kind of the credit to Brady Speller, who asks, what are your thoughts on a hybrid currency that is both crypto and physical? For example, a new currency called the Lumi is backed by solar, wattage, and gold. It's just getting organized. Do you think this type of currency will be widely adopted?
Barry?
Oh,
Barry, you
sorry,
heard the question?
Can you repeat it?
Yes, sorry. What are your thoughts on a hybrid currency that's both crypto and physical? And basically the example that was provided was Lumi, which is backed by both solar, wattage, and gold, and it's just being organized. Do you think this type of currency will be adopted en masse in the future, or in the very near future?
No, I don't. So
No.
most tokens currently are just being used to raise capital. They're being used in place of a security. We went through this in 2017 with the ICOs. Now they're being tokenized, and it really depends how it's presented. And the SEC is still defining that, working that out. But people who create tokens and look at it to be a currency as a form of utility, especially for solar and things like that, you're talking about a rewards program, and we could talk about it further. But no, I don't see it as a real currency going forward that'll be adapted in any form.
Agree.
Got it. Thank you. And I don't know how many people we have here that are actually representing, that are in the founder seat of an early stage tech startup, but I think this question is nevertheless super relevant. So Sam Smiley, fellow Z Shark, very happy to see you calling in from Manhattan, New York, asks, and he's directing this question specifically to Bret. He says, what are your thoughts on companies or firms like Antler who offer seed money in exchange for equity, that are incubators for startups, and they provide assistance and guidance among other, I'd say, resources, right, and opportunities? They seem like a fishing net, just trying to grab whatever's out there with a 200K cap for equity as bait. What are your recommendations and thoughts?
Yeah, so I don't know Antler specifically, but I know there's a lot of organizations that kind of prey on entrepreneurs, and some of it can be a little bit of a scam, if you will. So I would be very careful. I would look at their terms, like what are they really offering, and how much equity are they taking? I would really look at the terms and have someone that's gone through it with experience to actually get some references that went through that. So there's so many different incubators that have different models, and you got to be very careful who your investors are and what is tied to that, and if there's any negative covenants. So I'd be happy to look at it offline and give you my real opinion, but in general, be cautious.
Bret, I would say that I would imagine that Antler, because I'm slightly familiar with it, would be on par, maybe like half a tier below Techstars and Y Combinator, which I'm assuming you're familiar with. And a lot of people feel like, well, if you get into Techstars, it doesn't matter if they take X amount of equity away. It's so good for your branding, etc.
Great brand.
So what would you say? Let's pretend that we're not talking about Antler. Let's rephrase the question, pretend like we're talking about Techstars, Y Combinator, kind of the biggest of the big incubators / accelerators with like 1% acceptance rate. In those situations, what would be your recommendation?
I mean, their track record speaks for it. Their brand speaks for it. And I know a lot of organizations are trying to kind of duplicate or do something similar to that, but I don't know their track record, but I think that's the real thing. Techstars, you get into Techstars, you have a very, very good chance of succeeding. The network is phenomenal, right? The opportunity to get more capital. So doing that same startup in Techstars versus just doing it on your own, Techstars, they'll probably really kick your butt if you're two entrepreneurs with the same skill set and so forth.
Look, I'd like to add something here. This is all bullshit. honestly. To go take money from people where you don't have even revenues is the most stupid thing ever. Go and bootstrap your company, show traction, show track record, then you have the upper hand over these incubators, these smart luminaries. They're going to take something for nothing. Yeah, they give you network. Everybody has network. Everybody has access to people. Everybody has to do that. It's a question of, it's not a question of having a network. Every idiot has 10,000 followers on LinkedIn. How you monetize your network? You can have 100 people that you people really smart. You can monetize this. These guys are all brand. Branding means shit. You know, oh, I have a brand. I have this. Do it on your own. Don't rely on anybody. You don't have to give that much equity in your deal at the beginning because you are the most vulnerable at this point. You're the most vulnerable. You're going to give them everything to see everything. And then if they don't like you, they're going to fire you. Easily fire you. They fired people much bigger than you. You know, they fired people like Steve Jobs, you know, etc. So stay in control, show traction, show track record, get the money from family and friends, bootstrap it. Then you have the upper hand. Tell them, this is the valuation I want. You don't like it? Next. There's so much money out there. Be a shark. Stop, yes, you know, this guy is a bright name. I'm going to go and bow, bend over. Don't bend over for anyone. Kill them.
So Ziad, sorry to play devil's advocate here, because I feel like I've been on both sides of the coin. Would that still be the recommendation for early stage startups, for instance, in the pharmaceutical space or deep
any industry? Let me tell you something. Any industry, doesn't matter.
So what counts as traction if you're
I will tell you. There's different ways of skinning the cat. You don't have to grow organically. Everybody, they teach you at Harvard Business School, the best business school, that you have to grow like this. You have to lose money for the first 3 years. And then this revenue model is broken. These guys are idiots. They're academics teaching you how to run businesses. They have no skin in the game. They pontificate. They think this is the way to go about it. You don't have to waste 3 years losing money to make money. You know what? Let me tell you what, when people come to me with an idea like this, I tell them, look, let me ask you a question. What does it take for you to be profitable if you have access to all the money in the world? 99% of them tell me, oh, it's impossible to be profitable like this. Why? Because they were taught at Harvard School that it's possible. It means that you're not a businessman. If with all the money in the world, you cannot be profitable 6 months after I found you, you're not a businessman. You're a technologist, you're whatever you are, you're a smart guy, but you're a scientist, but you're no businessman. And by the way, scientists, doctors, technologists are the worst business people, especially scientists and doctors. They have no clue about how to make money. They don't care. They get enamored in their technology. They're so smart. Look at my technology. I don't give a rat's ass about your technology. How are you going to make money? What's the bottom line? Put yourself in the money man's guy. How are you going to make money? Show me that you're going to, and then, you know, you don't have to grow organically. You can go, Christina, through acquisitions, like the transaction we're talking about, you and I. You can go through acquisition. You can scale it very aggressively. It's much easier to raise acquisition finance money than startup money, seed money. So get out of this seed money thing, going to venture capitalists, selling them a piece of your company. Think big, scale, grow through acquisition, bootstrap, stay in control. If you're not in control at the beginning, you're not going to be in control later on. They will kick your ass. It's ruthless.
Thank you, Ziad.
Finally, you know, we only have 8 minutes left to go. I think it'd be really nice if we can go through the entire panel, and for those that have spoken or panelists involved, if you could present your final thoughts in 30 seconds, max 1 minute. And Ziad, if there are any other points that you'd like to address.
No,
questions
you know
you'd
what?
like to
You know what?
prior.
I was going to suggest this. That's a brilliant idea. Let's go through that. Through the board, and I will speak last. Go ahead.
Well, I start.
Stan, go ahead, Stan.
Yep. In summary, this is all about you. It's about your desire. It's about you being willing to lay your money on the table and say, I'm in. It's about you developing something and having a team behind you to work with you in order to achieve success. You know, do as much networking as you can, but work your butt off day and night until you get something going. And when you get it going, don't give it away. Don't go to venture capitalists and say, oh, please give me your money. If you can turn your money into a profit, if you have the right team, people will come to you to give you money.
So let me go next. Yeah. So again, I sincerely request you all to pursue your passion, because we have a limited time on this planet and you're not going to carry anything with you. So until and unless you enjoy your life on this planet, the only way you can do is by pursuing a passion, and every adversity consider as an opportunity for you to explore and see how you can solve that problem. That's where your money comes and your satisfaction comes, and you will be recognized well and rewarded well. So with this, I would like to thank all of you for joining us today and look forward to helping you whatever way we can through Financial Policy Council for you to become a millionaire or billionaire. Thank you.
I'll go next. Yeah, so my final thoughts are, just kind of piggybacking off everyone else here. Think of yourself as the main priority. You're the most important person in your life. Obviously, when you have a project, don't ever let someone make you feel like you need them or won't be able to make it without them. There are so many people out there. In today's world, it's easier than ever to reach out to experts, to reach out to money. Literally over 90% of the people in my life, in my network, and the people I've done business with, have been off LinkedIn, have been off different networking, have been off me cold calling, saying, hey, I'm interested in doing this. Especially young people, it's easy to get someone who's 50, whatever, expert in an industry, make you feel like you need them. You don't. Just like that guy, there'll be another 500,000 people. So always make sure that you prioritize yourself, stay strong, and do things on your own terms. Because if someone doesn't let you, just replace them.
Very good. I'll go next. Just to echo that, dedication, grit, taking massive action. You build true wealth by launching your own business. You need to do it yourself. You can control your destiny. Just focus every day on value creation and you will succeed.
I'll go next. So it's never too late and never too soon. So if you're 13, 14, whatever, it doesn't matter. You have to work hard, make connections. Like Paul was saying, LinkedIn it's a great tool. It's not a social media network like Facebook. It's a freaking tool to make money. So use it that way. Surround yourself with experts and enamor them with your dream. You have to find your passion and then enamor your team with your dream, okay? They're gonna help you get to where you wanna be and further. And that's it.
Jump in. This is Bret. I think in summary, look at passion and determination. Whatever you're doing, be passionate about it. If you're not, just drop it. Don't do it just for a pure transaction. If your passion is about making money, do something that does that. But I think whatever you really want to focus on, you could really be an entrepreneur and have great wealth in almost any field. But just have passion for it, determination, and you're going to have some highs and you're going to have some lows. But don't let the lows get in your way. Just keep going.
I guess I'm last. So I have a list of 72 things here. No, I'm kidding. I have 3 quick things. Number 1, diversify, right? Start by learning these concepts you've heard about today through reading, videos, or a mentor. Number 2, buy something in crypto or a blockchain-based alternative asset, something especially like tokenized real estate. Look into it. It's real estate and blockchain, not crypto. Last and but not least, most importantly, become an entrepreneur today. Control your destiny and start or invest in a business at any age. Thank you very much. You can all get in touch with us. We're all on LinkedIn. You can find us through the Financial Policy Council. Thank you, Ziad. Thank you, Christina.
One last thing to close. Look, money is about freedom. You want to be free, you're going to have to make money. There's no other option. If not, you're going to be a slave all your life. What choice do you make? If you want to make money, you're going to have to start a business first. If you're not an entrepreneur, and whether you buy a business, you create a business, you have to scale it. Can't take money from it. Two, invest for the long term. Long term. Don't go and crack if your stock market goes down or the Bitcoin goes down. Long term. I'm a very long-term investor. I buy, I keep. I haven't sold gold for the last 12 years. I haven't sold things for some stocks for the last 15 years. This is it. Drop them. 3, find different revenue streams. Don't just focus on one revenue streams. The economy tanks, this goes bust, etc. You have a lot of revenue streams. You have to outsmart the market, outsmart the system. 4, find the best people around. Best people around. You don't have to like them or agree with them. They have to be real fucking good and make you tons of money. You have to trust them and know how capable they are, whether you like them or not. Everybody wants to be liked today. Everyone just like, I like you, I don't like you. 90% of the losers are people whom you may like. You know, it doesn't work like this. This is war. This is ruthless. The world is not for the weak and for the meek. Government is never going to take care of you. Corporate America is never going to take care of you. No one gives a rat's ass if you live or die. You have to be a self-sustaining cash flow machine. And your only boss, my only boss, is money. Because this provides me with security, freedom. I'm opinionated. I can say whatever the fuck I want, and nobody's going to stop me. As long as I'm not stealing, cheating, this is an opinion. This is what you want to be, a big player. Aim for that. You can do it. I came here as a legal immigrant. People couldn't pronounce my name. Now they read my books and watch my courses and do business. You can do whatever you want. No limit, no age. No, I'm young, I'm this, I'm that, I'm black, I'm white. This is all crap. They put all this stuff to pull you down. Oh, you can do it. Oh, it's impossible. Everything is possible. This is America, and we're going to take it back the way it used to be. Capitalism, freedom, prosperity, empowerment. That's what it is. So time to wake the fuck up. Thank you so much for your time.
Thank you very much, Arash. Thank you, Ziad.
Thank you.
Thank you.
By the way, we're going to be doing this on a regular basis. So I hope we keep in touch.
This is fantastic. Thank you so much.
Thanks, everyone.